Welcome back, everyone. We're diving deep again, looking at this really interesting stack of sources you sent over. And today, we're seeing what looks like a massive shift happening almost silently structurally, reshaping the global economy, even defense. It's a story about, well, competition, finding alternatives, and maybe old ways slowly fading.
It really is. These sources, they're dense, yeah? Covering currency, space tech, it's all in there.
Yeah.
But they all kind of point to the same thing. This friction between major powers, it's forcing everyone to rewrite the financial rules. So our mission really is to break down four key things for you. The Yuan's surprising moves, that US-Korea deal, the new space race, and why central banks are suddenly buying gold like crazy. We want to turn these complex things into some clear aha moments, hopefully some useful insights for you too.
Okay, let's get into it. This structural change, starting with maybe the biggest currency story this year, the Chinese yuan. So the headline fact is pretty stark. Late September 2025, the yuan officially bumps the British pound. It's now the world's third biggest currency in global foreign exchange. FX transactions hit 11%. Pounds at 10%. That's a big statement, right? Growing influence.
It is. It definitely is. But we need to be really clear about what kind of influence this is. Because the yuan, it's living this kind of paradox right now. It's got two big jobs to do. And honestly, it's only really succeeding at one.
Okay, yeah, let's make that distinction super clear for everyone.
All right, think about it like this. Money you use versus money you save. There's the cash you use day to day, maybe paying for goods you import, settling a trade deal, that's the trade currency. And the yuan, it's actually doing really well there. Lots of deals, especially with Russia, Saudi Arabia, Brazil. They're using yuan for actual business.
Got it. So for spending, for transactions, it's gaining ground fast. The transactional cash, like you said. But what about the other job? The reserve currency. That's the savings account, right? What central banks stash away for a rainy day.
Exactly. And here's the weird part, the paradox the sources point out. IMF data, this just came out for Q2 2025. It shows the yuan's share of global reserves. That big savings pile, it actually went down a tiny bit, decreased.
Whoa, okay. So countries are happy to use it for trade, but they're getting a little less keen on holding it long term as a safe asset. Why? Why the hesitation to put it in the national savings account?
Yeah, it boils down to a fundamental issue. Trust and control. Central banks, their number one priority is keeping their savings safe and easy to access, right? Liquid. China still has really strict rules on money leaving the country, capital controls. Plus, there's always the geopolitical risk factor, political tensions. For the yuan to be a true global reserve, like the dollar, China would probably need to open things up more, give up some control. And, well, right now, they just don't seem willing to make that trade-off. The political risk seems bigger than the financial gain for others.
Okay, so if changing their whole system isn't really on the table, what's their next move? How do they work around this paradox? The sources keep mentioning this thing, mBridge. Why is this specific digital currency project such a focus? Is it just another payment app?
No, mBridge is much more than that. It's kind of like an engineering solution designed to sidestep the political problem.
Yippee.
You've got the central banks of China, Hong Kong, UAE, Thailand, plus the Bank for International Settlements, the BIS. They're basically building this platform using their own central bank digital currencies, CBDCs.
And the implication of that is?
It means they're creating a whole new set of financial rails.
Yeah.
Instant payments, 247, cross-border. And crucially, it completely bypasses the traditional system that runs on dollars, the SWIFT network. We're already seeing reports, like Chinese state energy company, the CNOC, for example, using it for actual oil payments. So if mBridge really takes off and more countries join, it's not just about payments. It's potentially a blueprint for a financial system that's, well, resistant to U.S. sanctions.
Okay, so the insight for you, the listener, is pretty clear then. Keep an eye on who joins the mBridge project next. That could be a real signal, showing who's lining up in these emerging non-dollar economic blocks.
Right, that financial maneuvering definitely shows how global friction impacts trade. But let's switch gears slightly. Look at a specific negotiation, the U.S.-Korea financial deal, because the backdrop here, according to the sources, is really tense. Oh, extremely tense. You've got the Trump administration pushing South Korea for this, frankly, unprecedented $350 billion advance investment. And it's directly tied to these ongoing, pretty tough tariff negotiations. Huge pressure.
And Korea's response, they're asking for something big in return, right? This unlimited currency swap.
Exactly. That swap line is like an emergency credit line of dollars from the U.S. Fed. It's a safety net. If there's a market panic, maybe linked to these huge demands, Korea could instantly get dollar to stabilize things. Crucial for them. So in this high-stakes game, Korea made a really interesting strategic move. They offered the U.S. Treasury monthly reports detailing all their actions in the foreign exchange market.
Okay, giving up that data. What's the strategy behind that? Seems like a concession.
It is, but it's calculated. Think of it as a two-pronged approach. First, they want to kill the currency manipulator accusation before it even starts by being radically transparent, saying, look, here's everything, every month. They're trying to make it impossible for the U.S. to use that label as a weapon in the trade talks.
Ah, okay. Using transparency as a shield. Smart. What's the second goal?
It's all about laying the groundwork for that currency swap. They're giving the small thing, the data, hoping to build trust, establish, quote, close communication. They need that foundation to then argue for the big thing, the swap line. They're trying to frame it as necessary for global stability, not just for Korea.
The sources also mentioned something called a hidden victory for Korea in this deal, about their national pension service, the NPS. Why was that significant?
Right, the NPS. It's absolutely massive, one of the biggest pension funds globally. When an entity that huge does normal currency hedging, just protecting its investments from exchange rate swings, it can look like market intervention because the amounts are so large. In the past, the U.S. sometimes blurred the lines. Getting specific agreement to the NPS's normal hedging is off limits for political attack. That removes a potential point of conflict down the road. It's a subtle but important win for Korea.
So for investors, people watching this, what does this data sharing agreement actually signal right now?
Well, right now, it's mostly potential. The real signal, the big one, would be if they actually announce that currency swap. If that happens, maybe around the APEC summit in late October, where these tariff talks might come to a head, that would be a huge game changer. It would likely stabilize the Korean won, lift a lot of uncertainty.
But we have to stress this right. This data deal, it's just groundwork. The fundamental risk, that massive $350 billion tariff demand, that's absolutely still on the table. This agreement doesn't solve that core issue?
Not at all. That's the main event, still looming.
Okay, so the U.S.-Korea situation shows friction leading to financial adaptation. But that same friction, that great power competition, it's piping things into totally new arenas, literally skyward. We're talking about the second space race. Sources say China just hit a milestone with their Golden Dome system. It achieved initial operational capability, IOC.
Right, IOC. Basically, that means their system for fusing data from different sensors, tracking things in space. It's out of the lab and ready for limited military use. It's a big step. Suggests they're getting much better at seeing what's up there.
And how did the U.S. Space Force react? Did they just say, okay, challenge accepted?
Not quite. They acknowledged the progress, yeah. But they immediately pointed to what they see as a critical weakness, a fatal flaw. This Golden Dome apparently has a significant blind spot when it comes to tracking one specific kind of threat. Hyperglide vehicles, or HGVs.
Ah, HGVs. Those super fast missiles we hear about, they don't fly like normal ballistic missiles, right? They maneuver unpredictably high up, designed to be hard to track.
Exactly. They're designed specifically to evade current defenses. And the U.S. response, it wasn't just a statement, it was action. The Space Development Agency, the SDA, just successfully deployed its Tranche 2 tracking layer satellites. Late September.
The direct counterpunch. So these new U.S. satellites are designed specifically to track those tricky HGVs, from launch to impact.
That's the idea. Birth-to-death tracking is the term they use.
Yeah.
It's designed to directly target that Chinese system's blind spot, neutralizing the advantage. And look, this isn't just about one type of missile. This is part of a much bigger structural shift. We're really seeing the start of a massive, likely multi-trillion-dollar industry moving beyond just launching rockets. Think space internet, constant surveillance, real-time tracking from orbit.
Okay, but some might say, isn't this just more expensive satellites? Another hardware race. Where's the real competitive edge now?
That's a great question, and the answer is shifting. It's not just about the hardware anymore. Not entirely. The real cutting edge now. It's in the AI and the software. How fast, how accurately can you process all the insane amounts of data pouring down from these new sensor networks? That real-time data fusion is key. We're seeing a whole new sector emerge. Space defense. It includes things like anti-jamming tech, cybersecurity for space assets, even concepts like killer satellites or guard satellites.
Wow. So if you're looking at the traditional defense giants, Lockheed, RTX, Northrop Grumman, you can't just value them on fighter jets anymore.
Not entirely, no. You really have to look at how well their space and digital divisions are doing. That's where the serious long-term growth, potentially trillions of dollars, is likely going to be. It's a fundamental shift in valuing defense capabilities.
Okay, our final structural shift brings us right back to global finance. And this one really seems to confirm that de-dollarization trend we've been touching on. It's about central banks around the world making this huge kind of quiet switch away from U.S. government debt and into physical gold. And the data points here are, well, they're pretty staggering.
They really confirm a break, yes, a structural break in confidence, you could say. Two huge data points stand out. First, mid-2025, for the first time in something like 30 years, the value of gold held by central banks globally surpassed the value of the U.S. treasuries they hold. They're buying gold at a pace not seen in decades.
Wow. Okay, that's one. What's the second?
The dollar share of global reserves, remember that big savings pile? It hit a 30-year low. According to the official COFR data, it dropped to around 57% in the second quarter of 2025. The world is actively moving money out of dollars.
So this isn't just random market noise. This looks deliberate. Why? Why this massive shift now?
It seems to be driven by three big interconnected factors, and they all chip away at that old idea of the dollar or U.S. debt being perfectly risk-free.
Okay, let's break down those three reasons. Simplify them for everyone listening.
Number one, and probably the biggest trigger, dollar weaponization. When the U.S. and allies froze Russia's $300 billion in reserves after the Ukraine invasion, that was a massive wake-up call, a huge learning moment for every other country. It showed them, regardless of politics, that holding U.S. debt comes with political risk. Those assets can be frozen, basically turned off instantly.
Right. Suddenly, U.S. treasuries look less like a neutral safe haven and more like a potential political tool. Okay, what's reason two?
Growing distrust of U.S. fiscal health. Plain and simple. When you see the U.S. national debt climbing past $40 trillion, other countries start asking questions about long-term stability, about financial discipline. Add to that the reports we've seen about pressure on the Federal Reserve, attempts by the current administration maybe to influence its independence. It erodes trust in the long-term stability and predictability of the dollar.
Okay, weaponization, debt concerns. What's the third factor?
It's just the reality of a multipolar world. The old system, where the U.S. was the undisputed single superpower, that's changing. The world is becoming more diversified with multiple centers of power, and central banks are simply reflecting that reality in their reserves. They're diversifying into other assets, the euro, maybe a bit of yuan, but especially into gold, because gold is neutral, right? No single country controls it or can freeze it easily.
But, okay, play devil's advocate. Gold. Isn't that kind of old-fashioned? If the future is digital currencies, mBridge, all that stuff, is gold just like a safety blanket? How does it really fit in?
That's where the sheer scale of central bank buying changes things. It provides what economists call downward rigidity, a strong price floor. Gold isn't really competing directly with digital systems. Think of it more as the ultimate neutral collateral, the bedrock. In an increasingly fractured world, it's seen as that core stability asset that isn't tied to any one country's politics or policies. It's moved beyond just being a hedge against inflation. It's becoming a foundational piece of the reserve puzzle again.
So the immediate takeaway for you, the investor listening to this.
First, maybe reclassify gold in your mind. Thinking about a 5, maybe 10% allocation as a core stability holding, not just a temporary trade, seems more justifiable now given what central banks are doing. Second, the dollar. Look, its decline is likely to be slow, gradual, but the trend seems pretty clear. You should probably think about diversifying your currency exposure. Don't be all in on the dollar. Consider other fiscally sound currencies, maybe the Swiss franc, Japanese yen, depending on your situation.
And finally, that crucial mindset shift about U.S. treasuries.
Yeah, change the vocabulary. Stop thinking risk-free. Start thinking very low risk. It means when you build the safe part of your portfolio, you probably shouldn't rely only on treasuries anymore. Diversify that safety bucket too. Include some gold, maybe some very highly rated corporate bonds from stable companies, think like Microsoft perhaps. Spread that foundational risk. Hashtag outro.
Wow. Okay, so we've really mapped out some huge shifts today. You see the world systematically diversifying its finances, the yuan gaining ground, mBridge creating new paths, that massive rush into gold. And at the same time, defense competition is escalating into new areas, like this intensifying space race.
Yeah, the common thread through all of it, undeniably, is this rising geopolitical friction. It's the engine driving the slow structural erosion of maybe the old U.S.-led financial and technological dominance. Every single move we talked about, Korea sharing data, China building mBridge, the U.S. launching new tracking satellites, central banks buying hold, it's all reaction to or part of this larger global competition.
So as we wrap up, Here's something for you to think about, mull over. We see rivals building actual physical alternatives to the dollar system, like mBridge, and at the same time, they're actively challenging U.S. leadership in critical security areas, like space. The question is, how long can that traditional dollar-centric financial order really stay unchallenged when competitors are building viable alternatives on both the money front and the military tech fronts simultaneously?
That structural risk, that potential decoupling of global finance and security,
Yeah.
that really feels like the defining question of our time.
Definitely food for thought. Thanks for diving deep with us again today.